You have to understand, like under Biden, there was this insecurity about China, that China is going to overtake us this and that. But Trump doesn't quite feel the same way about America vis-a-vis China. He believes that if America is actually, is in power, okay, to the extent unencumbered by regulations and then all sorts of government interference, that the US is the most competitive economy in the world. So from that point of view, he is now trying to keep China back. He's just trying to propel the US forward to allow the US to realize its full potential. And I think that is a very constructive world.
All right, welcome to ReSolve Riffs. We have, I think, a humdinger of a guest today. We got the CEO, David Woo of David Woo Unbound, a global forum for dedicated to promoting fact-based debates on markets, politics, and economics. That's something we love to do around here at ReSolve for sure. And prior to establishing Unbound, David headed up the global rates and the foreign exchange and emerging markets, fixed income strategy and economic research at Bank of America. His career concludes stops at Barclays, Citigroup, and beginning his career as an economist at the International Monetary Fund. Also, side note, PhD in economics from Columbia, mathematics from Tufts. So, pretty steeped individual that we're going to be talking to today about global markets, politics, the impacts on markets, and great to have you here, David, and
Thanks for
looking
having me.
forward to your insights. Yeah. Is there anywhere you want to start in particular? You've got an absolute, net of interconnected relationships across countries, regions. Maybe we can start with some of your thoughts on your outlook in 2025. In some of the discussions you've had recently, you've highlighted some significant macroeconomic themes in 2025. And I'm wondering, maybe we can start there and you can elaborate on some of those and some of the primary drivers you might see influencing markets as we come into 2025.
Sure. I want to start maybe since, we just had the German election yesterday. I want to just basically take a minute and talk about the German election because I think this was a watershed event in many ways. And I think to a great extent, I think, it does signal a massive, how would you say, earthquake. And I think, and especially in light of the JD Vance speech in Munich last week, I think from that point of view, I want to start there only because it's topical, but also because it's very important. I think, to understand, I think the implication with the market implications of the German election, we have to realize that Germany has been the collateral damage of the US foreign policy over the last two administrations. You think about this, under Trump 1.0, the US went after China in a very big way when it comes to tariff. And that forced China to move up the value added in the manufacturing supply chain. And that, no question, put tremendous pressure on Germany, right? I mean, Germany used to dominate the car market in China, which is the largest car market in the world today. But Germany has been steadily losing market share in China over the last 3-4 years. In fact, actually, BYD, after having overtaken Volkswagen last year as the number one, basically most popular, car sellers in China, BYD's gone on to basically grow another 35% last year, while Volkswagen was down 7%. And so there's no doubt in that respect that US trade war against China sort of intensified Chinese competition for German manufactured goods. And that happened under Trump 1.0. And then came Biden, who was even worse for Germany. Because in my view, the Ukraine war is nothing more than a proxy war that Biden declared on Russia. And there's no doubt that the casualty is once again the German economy, because the result of the war is that the relative price on energy that Europe has to pay has gone through the roof, right? I mean, before the war, Germany was paying about twice as much as US for natural gas. Now it's paying 4 times more. I mean, it was at 1.8 times only a couple of years ago, it's come down, but still 4 times more. As a result, all the energy intensive sectors in Germany, whether it's chemical, whether it's steel and all that, has become completely uncompetitive. As a result, German companies have been like picking up and relocating elsewhere where energy is cheaper. So from that point of view, US, despite US claim as being German ally and this and that, U.S. foreign policy in the last 8 years really screwed Germany, the largest economy, in every possible way, in fact. Now comes Trump 2.0. And by the way, for all, I'm actually a Trump supporter, so don't get me wrong. But, there is no question that, you think about what, basically Trump 2.0 for Europe and for Germany in general. I mean, you just have to listen to what J.D. Vance had to say in Munich, which I thought was no less than earth-shattering. J.D. Vance rightly said that Europe, that has been cracking down on free speech, that has been suppressing democracy, no longer has shared values with the U.S. And in that respect, U.S. no longer feels that it needs to actually can justify, spending national resources to protect Europe. And this is actually very important because you have to remember under Biden, even though Germany got screwed over by Biden in a very big way, at least Biden pretended the world was divided between democracies and authoritarian regimes. Therefore, for Biden, the world consists of American allies and American enemies. And Germany was an American ally, whereas China was an adversary. So from that point of view, Germany was treated relatively better than was China. Now, J.D. Vance comes along and basically spells out a worldview that's exactly consistent with Trump's basically worldview, which is that, Trump doesn't see the world in terms of democracy versus authoritarianism. In fact, J.D. Vance will basically argue that Europe today has become so totalitarian that actually is practically indifferentiable from the point of view of China and Russia to the extent they've been cracking down free speech. The fact that you can call a politician ugly in Germany and get arrested and get put in prison, that just tells you how far they've gone. Just like in China, you wouldn't say that Xi Jinping is ugly, you might get arrested, but Germany too, apparently. Now, so why is that important? Because what this basically means is that the US no longer is going to treat Europe as an ally. It's as far as US is concerned, you guys now have to look after yourself. If we're going to do anything for you, you're going to have to pay for it in a very big way. Now, so I think from that point of view, this is a very important realization, which is that, last 8 years, the Germany has gone from really a great manufacturing powerhouse, steadily declining due to US foreign policy. And in many great ways, the US foreign policy has dramatically weakened Europe, and I think that's not going to change. Now, the reason why this election that took place yesterday in Germany is going to make things so much worse for Europe is the fact that actually it's produced, a government, the Christian Democrats are going to be, essentially running the show for the most part. Friedrich Merz, who is the chairman of the party of CDU, who's going to be the next chancellor most likely, he happens to be a Russia hawk. He happens to be someone who thinks that Europe needs to basically stand up on its own two legs. He happens to believe that Europe needs to have its own independent security policy. And in that respect, he's very likely to join forces with France, with Macron, to actually tell Trump, to go fuck off, I think actually this is going to be very interesting because this will be obviously very bad news for Europe because at the end of the day, Europe is still more dependent on the US than US is dependent on Europe. In that respect, I do think that with a much more hawkish, sort of like Germany, that also hates Russia, by the way. It's actually very interesting. Friedrich Merz hates Russia. To the extent that he's willing to, in fact, send long-range German missiles to Russia, something that his predecessor was not prepared to do. So we could very well see this Germany, while he's flexing his muscles, is going to potentially prolong the war in Ukraine, which is going to be bad news for Europe. But at the same time, they're much more likely to go head-to-head with the US, especially over the tariff war. And this is the most important thing because remember, Trump's 25% steel and aluminum tariff is going to go into effect essentially in the beginning of, at the end of March. And that's going to hit Europe very hard. Trump wants to unleash more tariff on what's called the reciprocal tariff, And right now, Trump has decided to view Europe's 20% tariff, 20% VAT, as a form of tariff, which, I'm not even going to argue with that, but that's how he sees things. And on top of that, Trump just announced that he's going to be soon unleashing tariff on imported cars. And guess what? Which is the country that has the biggest car export to the US? Of course, it's Germany. So in my view, all this basically means is that Europe, it's actually is going to end up with the short end of the stick under Trump 2.0. They're going to get screwed over again. And because of the people they just elected into government, okay, the clash with the US is just going to be even more frightening, I think, but in terms of Europe is going to really take it on the chin. The reason why I'm saying this is that DAX has been one of the best performing stock market over the last 4 weeks. It's been like on the tier. Everybody's piling buying German stocks. And I think this is going to be a I think there's going to be a bad surprise coming for the market.
So that the DAX is up 1% on this news after, as you rightly say, rallying very strongly so far this year on, what many might perceive to be some hostile rhetoric from the Trump administration. How are you squaring that circle?
I mean, the fact the market's up today by 1%.
Well, I mean, it seems like, why do you think the German market's been rallying? It's not just Germany either. It's, Europe in general. It's rest of world in general versus US has been showing leadership.
It's
so
very
far this
simple
year.
why the market's been rallying in Europe. The reason is the big story. I mean, I look at fundamental, I look at, flows and everything. The big story in the global markets in the last 3 months is that US retail investors decided to pile in a big way into US stocks. Since more or less December, we've seen massive inflows into the US stock market.
Yeah.
Almost as soon as the US election, basically was over, we saw this massive flows. And now what happened was, in view of the massive retail inflows in the US stock market, institutional investors who are indexed or benchmarked to the world stock market decided to lighten up their US exposure to the extent they were selling US stocks. And guess what? They increased their exposures to the rest of the world, to the non-US equity market, whether it was in Europe, whether it was in China and Asia, and so on and so forth. So we've seen this big rotation driven by the post-election massive retail inflows by US retail investors into US that actually facilitate this rotation of institutional investors away from the US to the rest of the world. As a result, the rest of the world have actually outperformed. If you look at MSCI ex-USA, has actually outperformed the US steadily, actually since the beginning of February. And I think that has been basically the rotation I'm talking about. But I think to the extent that DAX has already big run, Europe has already had a big run, and so on and so forth, and then the US looks definitely very, very vulnerable. I'm generally of the view that the market is due for a pretty significant correction, and essentially in the next 4 weeks. And I think to the extent that, every year we see the same story in December and into January, everybody and their grandmother put on these so-called year ahead trades, and then they get very crowded by the end of February, and then by March, you see a big correction. And I think that is what the market setup is for right now.
So, how would you react to the view that what Trump has done is convinced Germany that they need Europe, that Europe as a continent, as a monetary union, as a political union, they need each other more now than they have in many decades. And also that Europe, certainly France and in many ways Germany, already have been describing how they need to reindustrialize, how they need to expand their fiscal balance sheets, how they need to remilitarize, and that this fiscal expansion is a tailwind for economic growth in Europe.
There's not going to be any fiscal expansion. That's another thing. The most important takeaway from the German election is that between the AfD and the left party, is almost ensured that Germany will not be able to cancel its debt brakes, which requires a 2/3 majority in both the upper house and the lower house to overturn. So from that point of view, the CDU, CSU, the SPD, and the Green Party together do not have 2/3 majority. So as a result, they won't be able to overturn this debt brake. And that's why they're screwed. And in fact, actually, just for your information, and a lot of people don't understand this because the mainstream media doesn't understand either. The BSW, which is the other leftist party, okay, basically got 4.97% of the votes, okay? So they're literally just 0.03 percentage point away from crossing the 5% threshold. Okay. And let me tell you this right now. I mean, I just, following the story this morning that the BSW actually, they're consulting with their legal advisors to basically whether to challenge the results. If they cross over the 5%, then actually it's going to be almost impossible for the Germans to even form a government, let alone basically with a 2/3 majority to override the fiscal, the debt breaks. So no, you're wrong. I mean, because in that sense, that actually the most important result of this election is that they do not have a 2/3 majority.
Well, much of the fiscal constraint in Europe is a result of the EMU constraint. What is it? The Stability and Planning Act or whatever it is that limits.
No, it's not anymore. It's not anymore. There's a lot of room around that. The thing about Germany is some very, very specific. Germany, in view of the Maastricht Treaty, they basically passed a constitutional reform, I think it was back in 2017, that says Germany has to run a balanced, basically, budget, at least on a cyclically adjusted basis. And this is why Germany is in a class by itself. Of course, if everybody else is easing their fiscal policy, but Germany cannot, then it sort of becomes, counterproductive to the extent that Germany is the largest economy. So, and I think for all the other countries, I think at this point they have zero room in terms of fiscal easing. I mean, France is already like budget deficits almost as big as that of the US and elsewhere. So I think, again, I think one of the reasons why DAX did so well heading into the election was because people thought that Germany was going to be able to get this 2/3 majority to override this constitutional debt break that has been built into the German constitution, but it doesn't look like this is going to happen.
Well, one of the things that we've noticed, I don't know if you've noticed this, but I have, given Trump's bellicose, rhetoric and hostile attitude towards, Canada, Mexico, Europe, China, et cetera, is it seems to have galvanized nationalism in all of these different countries where, I mean, Canada was falling apart. Everyone hated Trudeau. They were looking for change. They were calling. They were with pitchforks looking for Trudeau's head. It seems like Canada's totally rallied around the maple leaf now. With
there's no evidence of that. I think if you
It's
look at the
amazing.
conservatives are still leading massively in the poll. I mean, unfortunately, the general elections won't be held until October. But there's no doubt, like if the election is held today or tomorrow, like the Liberal Party is going to be decimated. Sure, within the Liberal Party, you've got like that woman who I can't stand, Chrystia Freeland, who's like rallying basically the troops on the basis we're going to stick it to Trump, we're going to take it to him and that kind of thing. But again, I think the Canadians can see very clearly what this is about, actually. I mean, the Canadian government, this government has done a terrible job. It's been a total disaster what they've done to the Canadian economy over the last 4 years. So yeah, it's actually very interesting that notwithstanding what Chrystia Freeland has been throwing at the conservatives, calling them names, saying that as soon as they win, they're going to be basically like licking Trump's little boots, whatever it is. So far, it hasn't really taken the shine off the conservatives because I think the Canadian voters are a little bit smarter than that. But in general, I would say this is what we're looking at. Different countries are reacting to Trump policies very differently. And some are being smarter than others. For example, I think the Canadians absolutely are being totally idiotic in the way they deal with Trump, whereas the Mexicans are absolutely like they are serving as the model actually for the Canadians in terms of how to deal with Trump. I mean, it's pretty amazing. I mean, Claudia Sheinbaum, but again, Trudeau, who is Trudeau? I mean, he's like, no, nothing, basically prime minister. Whereas Claudia Sheinbaum, as a PhD, president of Mexico, this woman, just think about this. I don't have to tell you the story. 2 days after Trump got elected, Claudia Sheinbaum did a call with Trump, okay? And then the next day, Trudeau was seen as flying down to Mar-a-Lago to basically bend his knees, right? He was like, oh, wow, the Mexican president spoke with Trump already. Now I bet business get in the curb. It was actually when he returned, sounding like a total idiot, that Chrystia Freeland resigned, right? If you recall. Okay, that was how it went because she thought that he was like literally just capitulated, like without. But the Mexicans have been doing all this planning very, very methodically, and they've been dealing with Trump think about this. A week after basically Trump got elected, the Mexicans came in and seized a ton of basically fentanyl, which was worth about 1 million pills. Okay. And then they started to literally, like, since Trump got elected, they've arrested 40,000 drug dealers. Since Trump got elected, they have built 10 different, essentially, camps along the Mexican-US border with thousands of beds to potentially accommodate deportees from the US. Okay. Since Trump got elected, the Mexicans have revamped their entire customs system, whereby, like today, like, Chinese goods, especially thick Chinese goods that are trying to make their way into the US through Mexico, it's no longer possible because the Mexicans basically closed that door. They, in fact, even basically imposed a big tariff on Chinese imports. Okay. So from that point of view, like, this is why I have little doubt that next week, I have no doubt that Trump is going to do a deal with Mexico. I have no doubt about this. In fact, Trump needs Mexico. I would argue Trump actually, at this point, understands just how much he needs Mexico. In fact, Trump needs Mexico to make his security policy a success. Whereas Canada has been so behind the curve, okay, that I think it's much less likely that I think Trump is going to do a deal with Canada. In that respect, I think, or at least for the next 10 days between now and the day that the delayed tariff is going to go into effect, I would expect the Mexican peso to dramatically outperform the Canadian dollar.
Yeah, I think where I was going with that was Trump has declared the intention for the U.S. to focus on the U.S. and to back away from many of the support relationships with its global allies. And that has engendered at the margin a more national attitude among historical U.S. allies, and also the recognition that if they cannot rely on U.S. support, if that deal is now being unwound, then they have no choice but to revise many of the constraints and the rules that are self-imposed. Let's face it, these are artificial constraints that have been self-imposed in Europe and Canada, et cetera. And they're much more likely to recognize that there's no choice but to, revise their fiscal terms, back away from these constitutional constraints and begin to grow their own economies autonomously without relying on this sort of, global support relationship.
I think, like in a very long term, possibly, but right now I don't see this as being, I don't see Trudeau and Freeland, all of a sudden they're going to basically like close the door to immigration. They're going to crack down on whatever it is. They're going to now all of a sudden be deregulated. I don't see that's happening. Yeah, you're right, the conservative would have won a massive victory in Canada even without Trump. So from that point of view, I don't think that would have had a major impact. In Europe, it's not clear. So I would say that you're right. In the very long term, I can see that if Trump is successful, and I have no doubt he will be successful, I think in the second term, I think it's going to make a lot of people question what they're up to. I think to the extent that I think, you're going to have Germany's talking about, we're going to make Germany great again. Or Canadians, maybe like, the conservatives, when they come into power in Canada, they can talk about make Canada great again. So I think there's an element of that, but I think that is like, that's very long-term, it's untradeable. And it's actually, I think from the point of view of the investment strategy at this moment, I think, you need to, there will be a lot of things that are more important than that consideration in terms of guiding investors basically trading and investing right now.
How does Canada's energy sector play into all that, into these tensions? Isn't that a primary driver for the U.S.?
Remember, Canada's energy sector, we're talking about the oil sand basically sector, is a very expensive oil producing sector in Canada. This is also by the way.
Let's broaden it to hydrocarbons and the natural gas and pipelines.
Sure, no doubt. But what I'm just saying that decoupling, there was a time that the Canadian dollar was very correlated with oil price. This is no longer the case. And that just tells you the whole story, right? Because Canadian basically cost of producing oil from oil sand is so high, they need really much higher oil price to actually, essentially, encourage more investment in capex spending in the Canadian oil sand basically project. So I'm not saying, listen, I'm not downplaying Canada's role. The dependency of the U.S. on Canada in terms of like, provider of minerals and so on and so forth. And I'm not even telling you that, in a trade war that somehow the US has the upper hand over Canada and so on and so forth. I think it's a bad situation. But I do think that Trump right now thinks he's going to win this one. But I think on this issue, I am not quite so sure. Because, with Canada and Mexico, because, listen, I'm a professor here I'm in Israel. I'm a professor of economics here, and I teach game theory. The reason why game theory is a very big part of what I do is because I love game theory because, in game theory, there's no such thing as Adolf Hitler or Mother Teresa. There are only good players and bad players. And some countries play the games better than others. The reason why Trump is such a predictable actor, as far as I'm concerned, is because he's a great player. Because in game theory, there's only good player and bad players. Trump is a great player to the extent everything he does comes right out of the basic textbook. And there's no doubt in the first round on the fentanyl border security tariff on Mexico tariff and Canada, he played this divide and rule strategy, right? So you had Canada and Mexico, and then he knew that he already had Mexico in his pocket. So he used Mexico to put pressure on Trudeau, and then Trudeau blinked, right? But I think, that's how far Trump is going to play this, because in my view, now you're talking about a different situation, because the steel and aluminum tariff, for example, Canada's obviously is going to be the hardest hit, but after that, it's basically Brazil, and then you have Germany. So there are many more countries that are going to be affected. And then from that point of view, it'd be much more difficult for Trump to play the divide and rule strategy. So if Europe decides to stick it to Trump, it's decided to basically retaliate and just not cut a deal. And then, I think the Canadians might decide to go there with them. And this is where I think it's going to be most interesting to see whether actually these countries decide to join forces to basically to push back on Trump. And I think this is why I think the market until now, it's listen, I've been saying for the last 3 months that the market, was giving much too much importance to the fears about tariff on day one. Because I'm actually very constructive on China, because I think China's a totally different situation. In fact, actually, most of the tariff Trump has been threatening with, none of it actually touches China, by the way. It's interesting. But the point here is that, so because, Trump until now, except for the 10% tariff on China, has not really gone on ahead. And, so in that sense, the market was positioning for big tariff war. The market was short rates, long dollar, and all that stuff. And then it so far hasn't transpired. Therefore, I think the market's gotten a bit complacent. Okay. So I think that's why, if I'm right, over the next 3 weeks, we're going to see Canada is not going to cut a deal with Trump over the fentanyl. And then we're going to have steel and aluminum tariff, and Europe is not going to cut a deal. And then you're going to have the reciprocal tariff, and then you're going to have the semiconductor tariffs. And I think all these things are coming all at once. And I'm not sure countries are going to be able to move fast enough to do deals with Trump, especially these deals involve primarily developed countries that are going to be actually decide to work together to push back on Trump. I think this is going to be something. This is another reason why I'm generally negative about the U.S. stock market as we head into March and April.
And is that going to be pervasive across? So you said also that the European stock market probably doesn't hold much promise for you either. Is there any geopolitical region that's going to be a benefactor of any of this from a equity perspective? Is there some areas of the market that we should be looking at and focusing on, sectors that might benefit from this?
Right now, I'll just tell you my own position, right? So I run a big institutional business where I basically I service some of the biggest, macro investors in the world. My clients have a combined AUM over $4 trillion. And I can tell you that the way I'm trading this is very simple. I'm long Chinese stocks, and I'm short NASDAQ and basically DAX. These are positions I put on 3 weeks ago. Obviously it's done very, very well. Now, so from that point of view, right now, I'm looking at this as a relative value position. Insofar, I think Chinese stocks, if there's anything to be said about one stock market, even though it's done very, very well in the last 3 weeks, that may still have some room to squeeze higher, this Chinese stock market. And the reason is because, first of all, as I said before, if you look at, what is going on right now, it's under Biden, all right, but the U.S. was trying to rally everybody in the world to hit China. And right now, under Trump, is that China is being treated like everybody else. Okay. So from that point of view, to the extent the market was very underweight China heading into Trump's election, and I think still probably remains the case. I think there's a lot to be said that Trump's basically era is about leveling the playing field, that, countries are going to be, at the end of the day, it's not question of what kind of political system you have, but what you can actually offer up to Trump. And then whether you're a loser or a winner. And by the way, like, Trump sees Canada and Europe as complete losers, and he's absolutely right. Whereas he sees China as a winner. Trump, obviously, it's a very American thing. Obviously, you probably know, like Americans like winners. And I think from that point of view, I think, especially with, so I think there is more room for negotiation between U.S. and China. And by the way, this is something very important for your viewers to understand. Was geopolitically speaking, under Biden, the U.S. saw the world as a zero-sum game. Okay, so if China wins, then we lose. Then if we win, they lose, which is great. This is why you want to make sure China lose, right? Under basically Biden. Trump sees the world very differently. He doesn't see the world as a zero-sum game. He sees the world as a lot of opportunities of win-win situation. This is why for Trump, a deal is better than no deals. And Trump understands that any deal, for it to happen, there has to be something in for everybody. Okay. And this is the reason why I think, there are a lot of chips on the table between China and the US. But this is not to say that US and China will not remain strategic rival for the next 100 years. No doubt that will be the case. But in the short term, I think there are so many chips on the table. I think that's how they're going to play. So I think that's constructive on China, at least relative to expectation. And I think there's also the deep sea news. I mean, I think the deep sea news, I don't know to what extent people quite fully appreciate the transformative nature of DeepSeek. For me, DeepSeek is not proof of China's technological prowess. It is proof that just how easy it is to copy AI. I mean, to the extent that, DeepSeek can copy from OpenAI, it's just like in the year 2000 or whatever, in the late 90s, when Microsoft first rolled out Microsoft Office, it was possible to copy and paste a Microsoft Office on a CD-ROM and sell it for $3 on the street. It's the same kind of thing. Now, one is more extreme than the other, but it's a general point of view. So I think all of a sudden, this is the reason why, like the French who hosted the annual AI summit last week in Paris, literally, like, they were welcoming the Chinese delegation because all of a sudden they see China as helping the rest of the world to defeat America's technology monopolies. Because they're right in this one respect, which is, I said, under Biden, even though this whole thing about Europe is an ally and all that, in reality, the Americans never treated Europe or Canada as an ally, by the way. Under Biden, they just want to strengthen the U.S., basically, hold over this AI. It had very, very stringent policy in terms of who gets it, who doesn't get it, because they want to make sure that the big Magnificent Seven, the tech monopolies in the U.S., are going to be able to sit on this thing forever, and making the rest of the world pay a tax to the US through these Magnificent Seven for accessing AI. That was how the Americans actually saw. People like, the Commerce Secretary, who was a real idiot, and Biden, that's how they saw it. They built Fortress America with this technology. The fact that deep sea is now possible, all of a sudden, it's like the whole world has breathed a sigh of relief. I mean, to the extent that, now, especially deep sea is open source. Everything's not new, like, this is actually very transformative. I think that in general is when it place, especially with respect to what's going to play out next over the next 4 and 36 months, with respect to autonomous driving and the humanoid robots and all these other fun things that are in the pipeline. But China is now very, very well positioned. And I think that has to be worth some money in the stock market.
Sorry to interrupt, but I did want to take a quick second to remind listeners that while we do absolutely love providing our audience with world-class guests and weekly investment insights, we wanted to remind you that we actually do our best work outside of this podcast. And we try to do this by providing cutting-edge, globally diversified, and systematic investment strategies that are designed to be broadly non-correlated to traditional equity and bond portfolios. So we actually manage private and public funds, as well as bespoke, separately managed accounts for investors that seek the potential to smooth out portfolio returns in the long run. So if you do want to see that theory that we've been talking about put into practice, please do go ahead and check us out at investorsolve.com. Now back to the podcast.
Also, the scuttlebutt over the weekend is Microsoft canceling some data centers and things like that. So is that a result of that, the putting
Oh,
on
I
the brakes
love that.
of the
I just loved it because that
Magnificent
was part of
Seven?
my
Yeah.
predictions, by the way. That's one of the reasons why I was showing Nasdaq. Because that's
Okay.
exactly the point. Just think about this.
Maybe,
just
maybe
think about-
delve into it for the listener. Delve into the logic under
Yeah.
under that. I
The
mean, you've got
logic
most
is
of it.
great, right? Even like, you know what? You know, the cloud service business is a bullshit business, right? It's a very high margin business. And then I don't have to tell you, it's dominated by three big players. I mean, that is Microsoft, Amazon, and Google, and a bit of Facebook, right? And they wanted to keep it this way. I mean, I can tell you, I have a client, I mean, a big US corporation, who told me, who was very bitter about this. This is their like chief technology officer, who told me like, oh, 4 years ago, Microsoft came along and said, you know what? We're going to offer you this amazing package. We're going to basically offer to take your IT off your hands. We're going to help you basically migrate everything to our cloud and at a fraction of the cost of it's going to basically cost you right now to run your IT department. So the CEO thought it was a great thing. So they literally did this, okay? Just imagine, right? Because cloud essentially allows you to outsource your IT to one of those the cloud service providers. And then the CTO of this S&P 500 company was telling me recently, it's like, well, you know, David, you will not believe this because Microsoft just came back to their office to negotiate because like their contract just had, just expired. It had to be renewed. He said that Microsoft just said, okay, we're now raising the price by 500%. Okay. That's what you need to understand. This is what most people don't understand, which is that these companies, once you've already destroyed your entire IT department, they're going to come and they're going to crucify you. They're going to charge you through the nose for it. Now, so this is the reason, and the reason why you have to pay is because like you don't have your IT department anymore. And then for you to rebuild from the ground up, it's like almost going to be impossible. This is why you have no choice but to pay. So from that point of view, to me, the revenue growth of the data, basically the cloud data business for Microsoft, Amazon, to a great extent, it's not just about like, the unit sales was going up, but because their pricing power was going up. And then the last 2 years, these guys decided to go all the way. They say, wow, this AI is an amazing thing because AI is going to provide additional reason for them to get people to migrate to the cloud. So what they did was like they went out and bought all the NVIDIA chips possible in order to essentially corner this market. Because the idea was, well, if you haven't got enough computing power, which is very capital intensive, and you need hundreds of billions of dollars, you need the wallets to be able to play in the sector. They thought they had this goddamn entire thing cornered until DeepSeek came along. Because what DeepSeek basically shows is that you don't even need that much computing power if you have a more efficient model. And it doesn't matter if it's original or not, that kind of thing. So all of a sudden, these $50,000, $60,000 chip that they're buying from NVIDIA, which they've only started to depreciate. Just think about this. They're only depreciating them 15% a year, which is nothing. All of a sudden, they can say, well, maybe we need to mark to market value these basically these chips, which are probably not going to be worth that much. Okay, if you don't actually need that much computing power to generate, what you need. On top of that, again, another thing that Trump did, which just tells you the kind of person he is, a great person, by the way, is basically the announcement of the Stargate deal. I mean, just think about this. What is Stargate at the end of the day, right? It's about a Japanese company, SoftBank, that wants to invest in building data centers in the US with money from Abu Dhabi. In other words, Trump was basically like, what this basically means is that Trump is applauding as foreign investors come into the US and take a whack at the high gross margin of the likes of Amazon and Microsoft. Trump has no love for these big tech monopolists. He just wants competition. And he doesn't even care if the competition is going to be US, is going to be foreign. As long as it's creating jobs in the US, that's what he cares about. And that's a great thing. And that obviously is not good news for Microsoft. So from that point of view, I would argue that Microsoft, Amazon, these companies are trading at impossible, basically, valuation, especially given, to be honest, they're not real innovators, actually, by the way. I mean, I've been using Microsoft product all my life. I mean, how little progress they've made in terms of innovation is truly striking. That they should enjoy the kind of monopoly status that they have today. And that's shocking. But the point here is that I think there's no doubt that DeepSeek, the combination of DeepSeek and Stargate, I think that combination is definitely not a positive combination for the likes of Microsoft and Amazon.
Dr. Wu, do you think that Trump is going to roll back the restrictions on 2 and 3 nanometer chip exports to China then? Or he's going to provide China or allow companies to provide China with the more advanced fabs and other equipment so they can begin to scale the learning curve?
I don't think so. I mean, there are certain things that is like Trump shouldn't do, and he wouldn't do it. I mean, this is a case in point that, by the way, this whole idea of 2 nanometer, 3 nanometer, by the way, like for most computing purposes, like the size doesn't matter that much. The only thing that matters is for your phone, by the way. Like, if you're talking about like, chips that go into your cars, for example, or go into your fridge, they don't have to be that small. I mean, they could be actually large-ish because there's plenty of room to basically host them. But I do think that you're right. I think there's a certain limit Trump won't go, especially given, as you know, Trump wants to bring back semiconductor manufacturing to the US. And this is actually very important. This is why I do think that, one of the stocks I like is actually Intel right now. Not because it's a great company, it's a shit company. It's completely like, it's become a second-tier technology company to the extent it completely missed the whole everything. And, but there is no doubt, I can imagine that Trump wants to save Intel. Because without saving Intel, it's kind of difficult to envisage that the US is going to bring back semiconductor manufacturing in the US. And this is why there's all this talk with Broadcom and others. But I have to believe, just think about this. Intel is worth $100 billion right now. It's like no money, right? Because like NVIDIA is worth $3 trillion. So NVIDIA can spend like 5% of its, just basically like throw away 3% of its stocks, like for stock swap, they can basically take over Intel. So I think this is going to be very interesting. What happens to Intel is going to be fascinating because in a way that, Gelsinger was really not given a proper chance to really turn Intel around. And I think I would argue that, Intel is very crucial. I personally think that, they should sell it to, a NVIDIA or a Microsoft or Amazon, but I can imagine there will be a lot of interest in Intel, actually. Just not because it's a great company, because it's cheap. Cheap relative to valuation of these big US companies right now, okay? And I think for Trump especially, I think without Intel, it's difficult to see how he's gonna really turn this thing around, the US semiconductor industry.
I'd love to pull on that thread of the Chinese investment theme a little bit. We've seen very public photographs and videos of Xi shaking the hands of Ma and other tech leaders and other industrial leaders in China, inviting them to meetings, obviously acting very supportive and friendly. Does that factor into your calculation in terms of, wanting to be long Chinese stocks? And is the Chinese stock story a strategic, like a secular theme, do you think, for you, or do you view it more tactically?
Listen, I run, just so that your viewers understand. So like my biggest clients are all like, big macro hedge funds, sovereign wealth, pension funds, mutual funds. Like I think long-term, I trade very short-term. To the extent that that's what my clients do, because this is why, like, in the institutional space, like, if you don't make money in the next 3 months, like you're done. You're real money, you're going to get fired. If you're a hedge fund, you're gone, So that is sort of the general horizon I have, which is, think as long as you want, but basically make money the next few weeks. And then in my strategy is it's a basically absolute term strategy, which is benchmarked the 3-month Treasury bill. So I'm just trying to outperform 3-month Treasury bills, at a reasonable, basically Sharpe ratio. Last year, my Sharpe ratio was over 2. But the point here is that the way I think about this China trade is that, I think it could be a long-term trade. But I think, from that point of view, for me, the China trade is, I think I will be going in and out. Okay. I can't tell you, like, right now I have my full position on, and I've had it for 3 weeks. And then whether I'm going to keep the full position, I don't know. I think it depends on a lot of different things. But the point here is that I think China's gone from a basically, sell on rally story in the last 3 years to now a buy on sell off story. That much I would say. To the extent that I think, again, to the extent that Trump to be here for 4 more years. Let's assume that he survived the next 4 years, because I'm sure there'll be a lot of people want him dead. But assuming Trump survives for 4 more years, okay, and see through this thing, I think, yeah, I think, I think because the bottom line here, this is not about, oh, Trump is going to be, he's going soft on China, or that he's going to sell out to China. It's not that. It's that Trump is much more confident in the ability of the US to compete with China. You have to understand, like under Biden, there was this insecurity about China, that China is going to overtake us this and that. But Trump doesn't quite feel the same way about America vis-a-vis China. He believes that if America is actually, is in power, okay, to the extent unencumbered by regulations and then all sorts of government interference, that the US is the most competitive economy in the world. So from that point of view, he is now trying to keep China back. He's just trying to propel the US forward to allow the US to realize its full potential. And I think that is a very constructive world, especially given that, he's got Elon Musk. I mean, Elon Musk clearly is not afraid of any country, okay? I think when it comes to competition. So I think this is the right, but of course, what this basically means is that US is going to become more competitive. China is going to become more competitive. That's just going to leave everybody else in the dust, right? I mean, that's the bottom line. Right now, if you look at per capita GDP in Germany, I mean, most Americans don't even realize this. Like per capita GDP in Germany right now, it's just slightly above that of Mississippi, which is the poorest state in the United States. And Canada is collapsing in terms of relative income relative to the US. So from that point of view, what is actually happening right now is that while US and China move ahead to engage each other in competition, the rest of the world is just going to be left in the dust because they haven't quite figured out. And then in some ways that the competition we're talking about right now, you cannot just basically join the competition and expect to basically to catch up with the front runners in 1 year, 2 years, or even 10 years for that matter, because everybody else is moving ahead. It just basically means a lot of countries are going to be left behind, and in particular Europe and Canada, I'm afraid to say.
How does so you've got the game theory, the tariffs being used as a method of negotiation. You've also got this proliferation of technology, cheaper technology. Right. What are the implications for inflation? Is that something that's going to fall by the wayside? Is that something that's going to continue to have the laser eyes on inflation as a driver of potential returns? How does inflation play in all this?
Yeah, I think obviously when we talk about inflation, there are many aspects to inflation, and different countries obviously have very different experiences right now with respect to inflation. For example, I'm much less concerned. I mean, I think in Canada, for example, there are definitely clear signs of deflation going on. The US, I think, again, we got to basically take everything with respect to, the context, right? I mean, obviously, last month's US inflation came in stronger than expected. But again, I'm less concerned about, some of the one-off factors that contributed to the surprise, because, drug prices went up a lot in January. Now, I didn't predict it, but it didn't surprise me insofar that I know that, if you're a pharmaceutical company, you know that Trump was going to nominate Kennedy as the health secretary. And you know that Kennedy is going to push for essentially collective bargaining, to get lower drug prices using Medicare, Medicaid. Like, you're going to be raising prices like in January, okay? So things like that is going to happen. It's like, you know what? If you tell me that used car prices went up in January in the US, which was another thing that went up a lot, it's kind of difficult for me. That is the beginning of a sustainable, inflationary cycle for used cars, because I know, like, for new cars, I mean, there's very few, new cars being sold because people have bought a lot of cars, and in fact, inventory is very high among sold cars. So right now, for me, the most important thing with respect to US inflation is the fact that housing inflation is clearly stabilizing. And this is very, very, very important, okay? Because housing inflation, as you probably know, is the biggest component of core CPI, okay? And PCE for that matter. And so the combination of healthcare inflation slowing and housing inflation slowing, that makes me feel quite good. I mean, to the extent that those are sort of more the underlying inflation that is more important so I don't want to get too hung up on the sort of the one-off thing. Now, there's no doubt trade war is going to be somewhat inflationary. I mean, but this is also the reason why I don't expect Trump to basically, to put a blanket tariff. Because if you remember, before Trump got elected, he was talking every day about this blanket 10, 20%, tariff on all imported goods. Now, if he does that, that will be clearly very inflationary. And that's also the reason why I don't think he's going to do it. And I'll tell you why I say this. First of all, I think Wall Street doesn't understand, not forget about Main Street, is that as much as Trump talks tariff, in my view, tariff is plan B. Plan B with respect to universal blanket tariff. Plan A is actually spending cuts. And the reason why I say this is this, right? The US budget deficit is at $2 trillion, as you all know. To me, the biggest constraint, okay, for the entire Trump presidency is the fact that interest payment on US Treasury securities is now at $1.2 trillion. And Trump knows this, Scott Bessent knows this, anybody who knows how to do some numbers knows this, which is that unless the Fed cuts interest rates more aggressively than what is currently pricing by the bond market, that $1.2 trillion is going to go to $1.5 trillion already by the end of this year. And let me tell you this, if interest payment on US debt were to go up by $300 billion this year, Trump knows that everything he's promised during his campaign, he can just kiss them goodnight, goodbye, whatever it is, okay? So from that point of view, in my humble opinion, this is everything that the Trump team is trying to do, is trying to basically bring down that interest cost that is spiraling out of control. So what do they have to do to bring down the interest cost? It's very simple. They need to cut spending because much of that interest cost is due to the so-called term premium. That is the premium that long-term bond yields are trading relative to short-term bond yields. And because people think, oh, wow, people think that the deficit is so big, that this thing is going to blow up. So investors require high risk premium for holding US assets, in particular US Treasuries. And what I'm telling you is this. Trump understands the only way he can do this, he can bring down basically this risk premium that the US government is paying on servicing and not to mention issuing new debt, is by essentially restoring credibility to US fiscal policy. This is the reason why, of all people in the world, that Trump basically brought in Scott Bessent, the biggest. I don't know. Listen, I've been in this business for many years, 25 years on Wall Street. I know all the big guys, okay? And Scott Bessent, let me tell you this, if I've ever met a bond vigilante on Wall Street, and that has to be basically Scott. For the 15 years I've known Scott, like every time I talk with him, he's been expressing his clear concerns about the US deficit, US debt, and so on and so forth. But what I'm telling you is this, the only reason why Trump decided to make Scott Bessent, of all people, as Treasury Secretary, and has given Elon Musk a free hand in terms of cutting waste and fraud is because Trump understands that basically this is what you need to do if you don't want a fiscal crisis on your hand. Because all these successive US presidents in the last 40 years, they paid lip service to fiscal health and responsibility. But they've always, in the end, kicked the can down the road because they can. But Trump understands that he's not in a situation, the French said, there's a very famous French saying that's attributed to basically Louis XV, après moi le déluge. After me, the great deluge, okay? Unfortunately for Trump, again, he cannot kick the can down the road because the crisis is literally like around the corner if he doesn't take care of it. So this is the reason why this government is so I've been doing this for a very long time. I've never seen a US presidency, including Trump's first term, that is that focused on fiscal spending cuts. And so from that point of view, that's going to be the big story for me because that is going to be a disinflationary story. So again, whatever Doge is doing, and then the budget battle that's going to unfold this week and next week and the week after that, ahead of the March 15th deadline for funding the government before the government shuts down, I think all that is going to tell you about how tight the fiscal situation is, and then how this administration has decided it's got no choice but to bite the bullet. And I think from that point of view, this is why I'm not too worried about inflation. Again, the whole point is like last year, the Biden government's, literally opened the spit god. They were spending money like there was no tomorrow ahead of the US election. Even after the election, they were practically pushing money out of the door. Whatever money that hasn't been spent, they were trying to get it out there, okay, before Trump comes in. So you went from remarkably easy fiscal policy in the second half of last year to, my view, is going to be very tight fiscal policy in the first half of this year. And that, with that, I'm not that worried about inflation. And I suspect that once that starts to be felt in the economy, to the extent the bond market right now wants to see the data, okay, before it actually acts on it, I think even the Fed is going to start to sound more dovish. So I would be worried about inflation only if they fail in cutting spending. Because if Trump fails in basically bringing about real spending cuts, then he will have to resort to tariffs, universal tariffs, in order to finance the extension of the tax cut, okay? And that will be inflationary. But I think that's plan B. Right now, Trump is still operating under plan A. And the market gets this confused. Market thinks tariff is plan A and then spending cuts is plan B. But the market doesn't know shit about American politics or politics in general. But I'm telling you, that's the plan. And that makes me quite, to the extent that makes me less, I think the US economy is set to slow quite a bit. But that's also the reason why I actually I like owning bonds right now.
Yeah, I was going to say, so that's obviously bullish bonds and less constructive on equity assets.
Exactly.
So
I think,
where are you in the currency markets then? If you're anticipating some weakening of US growth, do you expect there to be some contagion? The rest of the world catches flu, or is there more heterogeneity about the fiscal space in other countries and maybe less constraints? And so you're likely to see a more heterogeneous response function from different countries and different regions.
Yeah. That's a good question. I don't like the dollar, so I wouldn't be buying the dollar. But again, but which currencies do you buy? That's why it's not that straightforward to me. Okay, I'll tell you what I like. I like EM currencies in general. Okay, so I'm long the. There's an ETF out there called EMLC, which is linked to the JP Morgan Global Emerging Market Local Currency Index, which is basically like local currency bonds of a wide universe of the emerging market currencies and countries, debt issuers. I like that because it means that I don't have to basically like take a huge bet about one country or two countries, so on and so forth. I think EM is going to be a net beneficiaries. And the reason why I say this is because, again, like EM in general, right now people are short EM. I mean, investors are very underweight EM right now. And that's the beauty of this. I generally like to buy something that everybody's short. I like to basically sell something everybody's long. But my mother brought me up very badly, so I'm a bit of a contrarian. But the point here is that EM has been very unloved over the last 3-4 years, partly because, EM was China to a great extent, and Biden just basically like destroyed China. And so if China is going to basically be easier, it's going to be better for EM. EM also is very sensitive to real interest rates in the US. I'm talking about real yields on tips, right? Right now, 10-year US real yields on tips is around 2%, right? I mean, in fact, right now there's like an 85% sensitivity of EM to basically, weekly changes in 10-year tips yield, which is the most sensitive asset in terms of, sensitivity to US real yields. To the extent I think real yields are going to come down. That alone, that is being long EM, local currency debt, it's a very good, I think, way to play for lower real yields. I mean, you can basically play a lot of different ways. That's why I'm also long treasuries, that kind of thing. But you could basically, you could buy tips and so on and so forth. But I think, that EM local market, I think currencies debt, I think it's actually a very nice exposure to another way to basically think about this exposure to lower real yields. Because again, the high real yields of the last 2 years in the US was a result of very stimulative fiscal policy under Biden and this whole AI story, which basically dramatically raised this perception that US somehow was going to actually be able to grow faster than everybody else. But I think both of these, I think Deep Sea has DeepSeek has burst the AI bubble to a great extent, and I think U.S. fiscal is going from expansionary to no contractionary. I think that combination should give us basically lower real yields, and lower real yields should be pretty constructive for EM fixed income.
Yeah, I mean, it's a strange phenomenon to be concerned about U.S. growth at the margin and then also be bullish emerging market currencies. Maybe just continue to kind of pull that thread and unravel that for us.
Again, I know in the past, we tend to think of EM currencies as being counter-cyclical. I mean, to the extent that when the world goes down, like EM tends to suffer, right? I mean, because EM tends to be very dependent on exports, right? So from that point of view, you have basically a big slowdown around the world that emerging markets, are going to slow more. I mean, so from that point of view, you look at developing countries, emerging market countries as being a leverage play on global growth. So when global growth, accelerates, they tend to grow faster. If global growth slows, they tend to decelerate faster. But this has not been the case in the last 4 years. EM actually, even though I don't tell you, in the last three years, the U.S. has been the best performing countries around the world, right? I mean, basically, because again, China, because China has been, we know what happened to China. I mean, but the point here is that this is why it's a very different. This is why history never repeats itself. I mean, history will only repeat itself if you have the same sort of if you have the same leading indicators. If you tell me that EM has done very well until now, and that therefore U.S. is about to slow and global is going to slow, that EM is going to go down, I can totally agree. But right now, it's the opposite. And by the way, also with Trump, I'm not going to assume that we're going to go into a recession or anything like that. It's not going to be like a Lehman collapse or whatever. It's going to be a slowdown, but I see that as the Fed cutting interest rates aggressively into that slowdown. And Trump is going to basically be a cheerleader of the market for the stock market, so it's not going to go down that much. So again, I'm just basically saying that we're going to see a slowdown, but the slowdown is not going to be a scary slowdown. And
so you don't see a global rate cutting cycle. You see a rate cutting cycle in the U.S., in some Western countries, but
exactly.
Emerging markets have more fiscal space. They've gone through 10 years of fiscal consolidation. They have the ability to stimulate, and China has declared its intention to. And so there's the dynamics at the moment are more favorable for Chinese growth or not, and related economies relative to U.S. and other Western countries.
I think that's exactly the point. I mean, again, as you know, U.S. and China have been in divergent business cycle in the last 3 years, right? China was slowing, the U.S. was accelerating, right? I think, I don't want to say that, we're not going to see China accelerating, U.S. decelerating, but I think something of that effect could very well play out here. Okay.
And what about the euro? I mean, you've been pretty bearish on Europe, for the reasons we discussed very early on. Australia, Canada.
I think, I think Canada, I want to go along Canada, but not until we get closer to the general election. Okay. Because first of all, you never want to sort of get too far ahead into the future, in terms of the market really cannot think about a lot of things more than a month at a time, maybe 2 months at a time. I think the market only started to focus on the German election about a month ago, something like that, maybe 6 weeks ago, that's it. I think we still don't even know who's going to be actually heading the Liberal Party until actually next month, right? I mean, is it going to be, if it's going to be Freeland or somebody else? But I think, I would be looking to buy Canada when we get closer to the general election.
So what policies might Poilievre, if let's say the Conservatives are in power after the election, what policies might he enact that would give Canada more prospective, optimistic standing in your view?
I think Canada has to deregulate right now. I mean, it seems that Canada is overburdened by regulations. And as a result, the economy has been stagnant, not to say the least. As you know, I mean, per capita GDP has been falling and so on and so forth. In Canada, honestly, in my humble opinion, what made Canada very successful until Trudeau came along was that Canada had the right kind of immigration policy, whereby Canada encouraged skilled labor. Okay, that was the reason why. Like I thought Canada, for years I was arguing that Canada should serve as a model for the U.S. because U.S. had all these lottery system where they were bringing in, basically people to ride taxis. Okay, in New York City who have no college education or nothing. Okay, just because they get into the door because they won the lottery, whereas Canada was able to poach the very best from all over the world because they had this policy and so on and so forth. I think that's that what Trudeau did in the last 3 years is completely inexcusable to the extent that Canada has been flooded by all these, without going into names of countries where they come from, but clearly, unskilled labor. Okay. So from that point of view, if for Canada to compete in the world, when we're talking about catching up to the US and China and really be able, Canada's a small country. So maybe, Canada doesn't even have to do that much to really be able to Canada doesn't have to excel in everything. They just have to basically pick the right area and just basically go for it. But for that, they need skilled labor. And so from that point of view, I think, that will be the first thing the conservatives should do. And the second thing conservatives should do is to basically break a lot of this DEI woke stuff that Jordan Peterson has talked about in the Canadian context, which is just, it's incredible. So I think Canada under Trudeau had just basically digging its own grave. And I think I just can't wait until the conservative gets in and clean house. But again, I just don't think the market can get ahead of that quickly. I mean, you don't buy Canada because, as you know, the election doesn't have to be held, I think, until the 21st of October. So, and then before they take power, it's going to be January. So this is going to be we're still talking about a year away before anything's going to change. And meanwhile, Canada, just nothing is going to change because nobody has an incentive to change anything right now. Okay. And I think Carney was a decent central banker, but I don't think he's going to make a very good politician. Certainly, I don't see him as being, we've seen a lot of this type of technocrat. Draghi was a good example. Draghi was actually very lousy, prime minister for Italy after having been the president of the ECB. And I think Carney is going to be the same. I mean, central bankers don't know anything. I mean, basically, and I don't know, he's going to turn things around, even if he wins the leadership race. I think Australia, the problem with Australia also, a little bit like Canada, is the productivity growth has been extremely slow. I mean, and this, to some extent, it has to do with immigration policy, but it goes one beyond that because, Australia is really very far from everything. And so from that point of view, it doesn't really enjoy the mobility of international capital, international labor, international, basically markets, trade. So as a result, when China was growing, Australia did very well. Simply, they saw massive terms of trade, right? Shock, improvement in terms of trade shock that they were able to sell more stuff to China at higher prices. But now that Australia wants to reorient itself away from China, that's a problem. Because I think this is why the Conservative Party, before the Labour, I actually think the Labour Party has done a decent job. But the Conservatives made a huge mistake. I mean, they thought that they were going to reorient away from China towards the US market. But what the Australians don't realize is that they make very similar stuff as the US does. And the US is very far away, and the US is never going to buy that much from Australia. So to think that, for the Australians to think that they were going to replace, China with the US as their biggest potential export market, that was literally they were dreaming. I mean, they were just completely unrealistic because US is a major agriculture producer, exporter. US basically produce a lot of raw material as well. So what, you think the US is going to start importing coal from Australia or wheat from Australia? The Australians were completely unrealistic. And they were, unfortunately, they were just blindsided by their fear of China, which I understand. I mean, they were afraid of China taking over. There was also basically this huge political rivalry between the Conservative and the Labour that pushed the Conservative in a certain direction because for a while it was very politically, it was very populist in Australia. And in a lot of other places to beat up on China, say, well, China, they're going to take over Australia, that kind of thing. So we now need to spend $300 billion on submarines. which is going to cost Australia through his noses for the next 100 years. Let me tell you this. It's not even the next 10 years, the next 100 years. But all in all, I think, I think the fact that China will be doing a bit better, probably all else being equal, is probably somewhat constructive for Australia. But I think, in terms of iron ore prices, but, you can see copper price, iron ore prices have actually firming a little bit lately. But again, I don't quite see China about to take off in that way. This is not going to be about, oh, well, you're going to see housing starts in China ramping up again or whatever it is. That I doubt you will see, because I think the Chinese real estate situation is so bad that, I don't think they're going to be building any, that real estate, look, it's not going to be come back as a driver of Chinese economy for the next 10 years. So I think from that point of view, it's difficult to get too optimistic about Australia. They just
Yeah, I
couldn't.
agree. I mean, sorry, Mike. Yeah, I was just saying,
No, go ahead. You keep going.
my general thesis on effectively the Commonwealth, so Australia, UK, well, UK not Commonwealth, but Canada, Australia, and also the UK, is just that we've had 15 years of profound overemphasis and overinvestment in residential real estate sector at the expense of any other productive element of the economy. And it's going to take a long time for them to unwind that, those excesses. And there's a lot of a debt overhang in the private sector and increasingly in the public sector, as the public sector begins to take that debt off the balance sheet of the private banks over, the next 2, 3, 5 years, right? So which is why I don't buy the fact that this was really a Trudeau thing, other than the immigration mistake, which is absolutely massive. I think it's just generally a Canadian thing and an Australian thing and a UK thing, where everyone just preferred to trade houses and try to earn lottery winnings off of increasing, condos and housing prices, instead of actually building real businesses and entrepreneurship and productive strategic sectors of the economy. So I struggle to see how shifts in governance are going to make much of a difference in the intermediate term to any of those countries, frankly.
Oh, I think that's an excellent point. I think if you look at Canada in terms of debt to GDP ratio, I mean, it's one of the highest in the world in terms of household debts, right?
Yeah.
I mean, and I think that is the real big problem that Canada faces as an economy and so on and so forth. And I think from that point of view, it's not like the US, as you know, like the US actually saw deleveraging in terms of household debt, because after what happened with subprime, the US household just defaulted of their mortgage debt. So the banks took a hit, they had to be recapitalized, but it doesn't really matter. But in the end, as a result, and then the millennials had no love for owning a roof over their head. So as a result, the US households, like the debt to, disposable income ratio is relatively low, actually, within developed countries. And then I think that is a plus. But you're absolutely right about Canada, Australia, and in the UK as well, because in the end, what these three countries have in common, as you know, is their mortgage system, favors basically floating rate mortgages tied to basically front end. So when the interest went down to zero, literally it was free money. And whereas in the US, still like people like to basically borrow 30 years, that kind of thing. So that never went to zero. And I think that has a lot to do with it. So I think from that point of view, like in some sense that these countries really got the worst in terms of the excess associated with zero interest rates and QE and so on and so forth.
One area
UK, of course, the problem is a bit different also, because the problem in the UK also, there wasn't enough building, by the way. I mean, this is actually one of the problems. There's actually a real acute housing shortage. And so prices go up also because of regulations have prevented the supply side response, in the UK housing market. I mean, like,
well, it's similar in Canada and Australia too, because of the immigration, right? I mean, you let 3 million people a year into Canada, add 10% of the population, they all want to live in the cities. You've got this exact same issue, just a scarcity of residential housing, and yet, they still are so expensive because those who own their homes are so in the money that there's no pressure to sell, right? So it's a strange situation.
Exactly. No,
Yeah, the one thing we haven't come around to is the yen, the Nikkei, JGBs, and some thoughts on that, area of the world, because it's a pretty substantial area of influence. Any thoughts on that?
Yeah, I think Japan, listen, I mean, I think Japan, I think there's some hope for Japan now. I mean, to the extent that like inflation is coming back, right? The reason why there's only one good thing associated with the inflation, which obviously because it helps deflate the debt, right? Because when interest rates at zero, right? I mean, like, and inflation was negative, they were paying positive real interest rates on their debts, right? The fact that they're still paying less than 1% and inflation at 2 or 3%, that just means that they're able to grow out of their debt. I mean, this is actually very important. This means that the Japanese yen is going to remain a weak currency. There's no doubt about that. I mean, this is why actually the central bank governor said this yesterday that, if long-term bond yields were to not cooperate, that the BOJ wouldn't even think twice about coming in and resuming large-scale basic JGB purchases. So I think from that point of view, like the way I think about this is that BOJ's number one job is to actually make sure that Japanese debt dynamics don't go crazy, okay? Don't go explosive. And I think that is really the BOJ's only job. I mean, the reality is that about Japan, it's difficult to get bullish on Japan because the Japanese yen has been the weakest currency in the world in the last 4 or 5 years. I mean, in fact, the Japanese yen right now, on a trade-weighted basis in real terms, is weaker now, okay, than it was before the Plaza Accord. I mean, just put that in perspective, right? I mean, if you think about this, it's pretty amazing, right? I mean, it's like the Japanese yen is extremely weak. This is why the whole world, like especially the Chinese in Asia, they just pile into Japan as tourists because like Japan is like dirt cheap, right? I mean, literally. And so, but what is interesting is that being cheap hasn't given Japan anything. Because if you look at Japanese exports, we're talking about in volume terms, it's been as flat as a pancake the last 4 years. In other words, that the fact that Japan's gotten cheaper hasn't really made Japan more competitive in terms of selling more stuff. And that to me is one of the most shocking things about the global economy from a macro perspective in the last basically 3 or 4 years. And I think that is largely the result of the fact that Japanese companies spend the last 20 years, building these global supply chains, okay? So that Toyota, is now basically building cars everywhere in the world, for the US, they're building the US, for Europe, they're building in Europe, and wherever they're basically building, what I'm saying is that these supply chains were so expensive to build. The Japanese companies have decided, we're not gonna take apart our supply chain just to return basically to Japan to produce stuff just because it's cheaper in Japan now. So as a result, I think one of the most interesting thing about the Japanese economy is the lack of responsiveness of Japanese export to a weak yen. Whereas a weak yen, to the extent it's been inflationary, has actually eroded household real purchasing power, and this is why household spending has been so weak. So right now, the way I see this is that maybe there's a sweet spot somewhere for Japan, which is somehow if they can get inflation expectation back at 2% and then stabilize the yen, the Japanese economy will do okay, but not like amazing, okay? But that said, there are pockets of the Japanese economy that I think will do very well. For example, in semiconductors, I think the Japanese have decided to go back to semiconductors after having essentially basically taken itself out of competition in the last 30 years. Because remember, like only in the 80s, Japan was number one in semiconductors. Mm-hmm. And then came, Taiwan, South Korea, and then in China. The Japanese decided to go back to semiconductor, and I think that is a huge thing. I mean, we're talking about basically, like a culture that is really about engineering, miniature engineering. The Japanese are not great innovators, but they're very good at, perfecting things at a small scale in terms of anything that requires detailed attention. That's what the Japanese are very good at. I think they're going to be a major powerhouse, I think, in semiconductor, especially given some of the stuff that's come out of Japan in the last 6 months. It's really been very impressive. I think the second thing I think, Japan will be very good at is in automation. I think the world is going towards automation with AI, and so on and so forth. The Japanese have led the world. I mean, in terms of robotic technology, automation technology, that's Fanuc, Yaskawa, and all that. Those companies are going to do very well. The third area I think Japan is going to do very well is in defense technology. I mean, the Americans can make shit these days, right? I mean, just look at, these F-35, the ship planes, okay? Boeing planes are dropping out of the skies, every basically, the Japanese, if the Americans are going to basically have a competitive, sort of defense, relative to China and Russia, whatever, they have to really join up with Japan much more. The Japanese are just, when it comes to manufacturing, among the major economies, I'm not talking about China, we're talking about, economies that can potentially help the US revive its own manufacturing, so on and so forth. It's obviously Japan. And this is why I think Trump, Trump really wants Nippon Steel to make a big investment in US Steel. I mean, and I think there's no doubt that Nippon Steel, can offer, superior technology to US Steel to essentially upgrade its manufacturing. And I think that's what the US really needs. And it's easier said than done. In fact, that's probably going to be the most challenging aspect of Trump's agenda, which is that, the US has retreated so much in manufacturing in the last 30 years. To get back into this game it's not going to be a piece of cake, regardless how great a genius Elon Musk may be.
Well, yeah, and we've covered a lot of ground. We've been at it for about an hour and 20 minutes. Is there anything that in your work, David, that we missed that you think is critical that you'd like to share? Great conversation.
Yeah.
Really appreciate your time. And then where can people find you? So it's David Woo Unbound, and his website, Twitter, social media. Where are you present in the world?
So, I mean, again, you can check me out for free I've got a YouTube channel, David Woo Unbound. So in which, I talk about, I sort of set out with this mission that, I spent 25 years as my wife for 25 years was always very embarrassed to introduce me to her friends in social circles. My husband makes a living by helping rich people become even richer. So I've decided that after I retire from Wall Street, I'm going to share some of my knowledge with everybody for free. So you can look me up on YouTube, whatever it's worth, David Woo Unbound.
Amazing.
Brilliant. You're not on Twitter at all?
I am also on Twitter, also David Woo Unbound. So I put on, I put up stuff on Twitter as well. Yeah.
Okay, great. Yeah.
Wonderful.
Okay.
No, very, very educational, very illustrative. Thank you for sharing this. You dumped a lot of knowledge on us today, and I think this is going to be a valuable episode. So thank you very much for coming.
Thanks for having me again. Okay.
Awesome.
Take care.
I did want to take a quick second to remind our listeners that the team works really hard on these podcasts. We spent a lot of hours trying to get the right guests, and we do a lot of prep work to make sure that we're asking the right questions. So if you do have a second, just do hit that subscribe button, hit that like button, and share with friends if you find what we're doing useful.